Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to focus on the topic of how to buy extensions. Extensions are typically something that I always caution people against buying because the whole concept, and as you try to catch the meat or the primary part of a move, you're working to accumulate that position inside your moving averages while we have a squeeze in play or a compression of volatility, and then sell those when you get an extension of the previous swing. Okay, you can see that that came through pretty well for BIDU, and then it continued to sit here and consolidate near the highs. One of the things that I like looking for inside a move like this is dropping down into your intraday charts and seeing how it's digesting the consolidation on the daily. Obviously that looks very good on the daily, but then when you come back down into your intraday charts, you can see that we've got excellent volume, where the 10x bars and the directional momentum, the conviction of this move is showing us that there is still good conviction in this stock, and then it's able to push up through that 1272 extension. Also remember that that's just a good place to begin peeling off profits. It does not mean that that's where a market is going to stop and reverse, and especially with these stronger trends where you have squeezes, I like focusing on them for continuation to the upside. So that is one catch, and those are the signals that I will use to allow myself to buy certain extensions. Another one that I was looking at, because John looked at this in his free video last night, but this was in BUFF. And this is something where you have to change your approach a little bit, because I focus on Fibonacci extensions so much as a primary part of my analysis. When you look at this based off your most immediate extensions, those would have already been made. So what you can do in this spot to say, well, we had excellent volume on the advance higher, we reclaimed the 8-day with a very solid move, and we've got conviction behind this move. Well, then what you want to do is go back and find that high volume breakout, which was this day. You want to say, okay, that's trading right there at 26.15, and I'm going to try and buy it at 27. That is $1 away from those high volume lows. Is that in line with what I'd be willing to use as a stop? Well, your average true range is 55 cents, and as a general rule of thumb, doubling the average true range and trailing that position up is a fine way to go about it. So if you wanted to say, okay, I acknowledge the extension here, but I'd like to try and buy this high volume breakout, well then pick up your shares, set a stop that is something that can give you some room to run, but then if it does start to pull back, you're not having to give up too much in a move that may be a little extended. So I do still like it. That is one way that I will be looking to participate in these next week, and I hope you find that as a helpful complement to your work.